Central Florida real estate investors, were you expecting sizzling summer sales and only got a fizzle? Well, there may be hope right around the corner. Today, we're going to take a look at the current interest rate environment and then try to digest all this and see where we're going for pricing and sales and what to expect on your next fix and flip property. Then we're going to finish off the episode with 3 tips that are going to help you stay successful on your next fix and flip project. We'll start with the Fannie Mae 30-year interest rate. This is where we're seeing a big change from the prior months. We're now down to 6.35% for the 30-year. Let's see, let's go back 1 year. It's actually almost at the same exact spot. So not too much movement year over year. Yeah, we're jumping to 6.2%. So we're actually higher year over year, but we've been at 6.85, 6.75. So we have seen a little bit of a drop. And if you actually go to another website I want to share with you, Mortgage News Daily, this is one that's going to actually track the current average 30-year interest rate that's out there in the market right now. So this is actually based on actual data that loans have been made on. And you'll see it's a little bit lower, 6.25% today versus the 6.35, which was the Fannie Mae number. That Fannie Mae number is issued once a week on Thursday or Friday, I think it comes out. So this is a current actual index of where mortgage rates are. So 6.25%. Been listening to a lot of webinars, a lot of podcasts talking about rates. And I think kind of the low that they're expecting would be maybe 5.75 towards a 6.75. So within that 100 basis point boundary. So could rates drop even more? Like I said before, let's keep an eye out on those job numbers and a little less on the inflation numbers. But if anything dramatically goes up, then you'll see a continued drop in that. So that could be some good news headed up. 6.25, 6.35 interest rates, a lot better than the 6.75. So if we can get to 6 or slightly below 6, I think you're gonna see a lot of borrowers come into the marketplace. I actually just read an interesting stat the other day. 40% of owner occupants do not have a mortgage on their property. Now 50% of that 40% are 65 years or older, but 50% are below that. So that means that there's probably a lot of people out there looking to move. They've just been a little hesitant on moving due to the higher interest rates. So where are we headed with prices? Now we know rates are coming down a little bit. Sales, closings, pendings have been pretty flat. Let's jump into our Reventure app to look at our 1-year forecast moving forward. This is what the forecast is from Reventure as to where they see prices headed. Orange County is now down to a 6% forecasted drop. That's because prices have been dropping, and you'll see along the coast about the same 7 to 8%. Over here in Tampa, 7-8%. So we're still hovering in about that 6 to 8% forecasted drop each year. A couple things I noticed, I studied this Reventure app, and one thing I was looking at is by county, it's that, but if you look at by zip code, the variation is huge. Yeah, so if you're familiar with Orange County, you could have places like 32805 down 7%, Pine Hills over here, 32808 down 10% forecasted for the year, and then go down to places like Dr. Phillips with only 5%, Windermere holding at basically even. So not only do you have to look at the county, you really have to understand how the zip code's performing. We can jump out over here to Azalea Park. That's a hotbed for investor action, and it's going to show you 8.5%. So if you need to check in on your zip code, as always, you could go to our website, capfund.com, click on market reports, and you can get all this information from Altos Research available for you by the zip code as to see where prices are headed. So that's some interesting information. But also look at the overvalued percentage. This is the percentage they say that historically real estate is overvalued. And I'm going to jump back to county. And you'll see in Orange County, says we're still overvalued, 12.4%. Jumping back to a couple of the other counties, 8.7%. Brevard, Volusia, 13.4% still overvalued. So at the current rates, that would mean we'd have 2 years of price drops that we're to expect now. So I think price drops aren't that bad, but as long as they're gradual. If they really hit the floor, that's when investors are going to get in real trouble. Granted, we're dealing with short-term mortgages, short-term investments, so we just have to be extra careful on that underwriting and on that estimation of our after repair value to understand there could be a slight decrease in prices. values. So keep an eye on that. Know that, once you're going into the project, by the time you're done, you could have a 3%, 3 to 4% based on current models drop in what your expected after repair value is. So price that in. You want to make sure you don't miss out on that. All right, so where we're headed, we think we're going to see more of the same here, a slight gradual decrease. But 3 tips you can do, and I've talked about these before, but they are really, really important in today's market. Tip number 1, when you're done with your property, I want you to get a good inspector to come in and through there and actually take a look, do an inspection report that's paid for, and have him tell you what's wrong with that property. You're not getting as many chances to get these properties under contract. So if you used to have 20 people coming through for showings, you may only have 5 now. Get that inspection done, get rid of all the loose ends so nobody could come in and beat up your rehab and have problems with it and move on to the next property. Tip number 2, be a price leader in the market. Look at your competition, see what you're up against. If you've got a fully renovated house, look at the other renovated houses within the next mile or 2 miles in similar neighborhoods. Find out what they're priced at and then be competitive. By competitive, I mean price underneath them. Unless you really are honest with yourself and think you've got this hands down better rehab than anyone else, any of your competitors, you need to be priced less. Otherwise, they're going to go under contract with your competition and you're going to sit on the market longer and longer and longer because there are less people looking at these houses. So number 2, be a price leader. It's really, really important. And number 3, I want you to avoid too much personalization. We've done some flips recently where I felt like they were over personalized. A lot of accent walls, a lot of different colors, black doors, black fences, a lot of mix and matches of metals, just a lot of things going on, which is maybe in that person's design mind great, but it doesn't really appeal to the masses sometimes. You're knocking off a ton of potential buyers just because you got too personalized with your renovation. Now, a solution to this be, instead of personalization, offer customization. Maybe instead of doing all those accent walls, maybe just do one and offer maybe a $1,500 budget for the buyer to do a accent wall or some type of design enhancement post closing. That way you're not going to change the property before it closes, and after it closes, they feel like they're going to get their personalization to the house. This is what new home builders do. This is what you should be doing. So 1, inspector. 2, be a price leader. 3, avoid too much personalization. Offer customization. All right, so I hope this helps. We'll see you on the next CapFund Market update.